Hi, Matrix. Welcome to another lesson. In this lesson, we're going to be looking at companies again. We're still doing the November 2017 question. We've done some other videos for question 1, 2, and 3, and now moving on to question 4. Let us jump straight into it. So question 4 is a question that is on cash flow statement and interpretation. This is also a very important section to understand. This is a section in companies, and I've already said in other videos that companies count for 60% of the paper for the final exam. So you need to make sure that you're very well versed in companies. So 4.1, it says choose a term to complete each of the following statements. Write only the term next to the question paper. The first one is these are appointed by the shareholders to manage the company. So obviously, those that manage the company, those are directors. So the answer there would be directors. So we put directors. And the second question, it says there is employed by the company to set up functional internal control processes. That is an internal auditor. So you know an internal auditor is employed by the company, but an external auditor is they only come at a certain point just to do the financial statements, but they're not employed like a full-time employee by the company. So we want to say for the second one, internal auditor. And then move on to the third question. A is a person who invests in a company by buying shares. That is a shareholder. So we're going to say here, shareholder. And then these are appointed by shareholders to give external unbiased opinion on the financial statements. These are external auditors, and that's the only option left. So one should have been easy. So we're going to say external auditors. Cool. And that is an easy, straightforward 4 marks. And then let's move into something that is a little bit more of a calculation. So we have a business that we presented here called SoFi Limited. The given information relates to SoFi Limited for the financial year ended 31 August 17. So that means the financial year began on the 1st of September 2016. So it's going to be very important to note that. For the purpose of this question, we'll just answer 4.2.1, and then in the next video, we'll answer 4.2.2 and probably the rest of the other questions. So it says here, please prepare the following notes to the balance sheet on the 31st of December 2017, ordinary share capital and retained income. And let's see the information. So let's go to the answer book. So here they've already gave us the authorized share capital. If they didn't give this is how you start a note to ordinary share capital. You just list authorized shares. So I'm sure they did mention. So if you go to share capital and dividends, they say there the authorized share capital comprises of 1.2 million ordinary shares, and that's already put in, so you don't get marks for that. And then they say the company had 900,000 ordinary shares that were in issue on the 1st of September 2016. In other words, at the beginning of the year. Let us look at what was the amount for that. So ordinary share capital, you can see it was not given. It is not given at the beginning. You only know that it was 900,000 shares that were issued. So we'll need to find a way to calculate that amount. But let's move on and calculate the things that are obvious to us right now. So they say here, the company had issued 150,000 shares at R6.30 per share on 1 May 2017. So what you're going to do here for the issued share capital. So you're going to have 150 150,000. It's 150,000 ordinary shares. And they say the transaction was on 1 May 2017. And the shares were issued at a price of R6.30 per share. R6.30 per share. So R6.30 per share. So that would be 150,000 multiplied by R6.30. That should give us a total of 945,000. So the company on the 1st of May raised 945,000 by issuing 150,000 shares. And then what's the other transaction? They say here 70,000 ordinary shares were repurchased, from shareholders on the 30th of May 2017. A check for 437,500 was issued for these shares. These shareholders qualify for dividends. Cool. So here we repurchase shares. We are told how much we bought the shares for. But when we receive that, when we buy shares, obviously we split that between retained earnings and ordinary share capital. The amount that goes into ordinary share capital is the average share price, and then the excess amount above the average share price, then it goes towards retained earnings. So let us look here. So 70,000 shares are being repurchased. So we need to calculate the average share price. So in order to calculate the average share price, we would have to take the ordinary share capital at the end of the year, which is 5,292,000, and then we'd have to divide that by the number of shares that are in issue. So in this case, just to calculate that, we would say 5,292,000, and we would divide that. So we divide that by. So the number of shares at the beginning of the year was 900,000. I'm not going to put all the zeros. And then I'm just going to add the 150,000, and then I'm going to subtract the 70,000. And then if we put that all together, we'll get 5,292 divided by 980, and then that will give us an average share price of R5.40. So the average price per share is R5.40. So we'll use that when we calculate the amount for the repurchase of shares. So we're going to say here, we have to put this one in brackets. So if we put this one in brackets, we're going to say 70,000 repurchase what was the date? 30th of August. We'll say 30th August 2017 at a price of the average share price, which is R5.40, and that should give us an amount of $378,000. So you can see here that the average price for shares is R5.40. So if we're paying the average price of shares, we would have paid these shareholders $378,000, but we ended up paying these shareholders $437,000, which is about 100,000 more. So if we pay them that amount, it means that we have made some kind of loss as a result of buying back those shares. And then, you can see now the calculation. So the calculation, and then at the end of the year, how many shares are in issue. So that would be 900,000 plus 150,000 minus 70,000. And therefore, we'd have 980,000 shares in issue at the end of the year. And then to calculate the balance at the beginning would basically be to reverse. So we calculate in reverse. So we'd say 592,000 plus 378,000 minus 948,000. So when you're going back, when you're calculating backwards, your minus becomes a plus and your plus becomes a minus. And then when you're calculating from the top to down, you'd say this amount plus 945,000 minus 378,000. And then that amount for ordinary share capital at the beginning of the year is 4,725,000. Just double check with your calculator. Cool. So we're done with the note for ordinary share capital, and then moving on to the note for retained earnings. So the note for retained earnings, they've made things a little bit easier because we've already been given the opening balance on the 1st of September, and then we've been given the net profit after tax. The thing that starts with then is the repurchase of shares. So the repurchase of shares. So the repurchase of shares, the shares were acquired. So they bought back the shares for 437,500. And the average issue price, the one that we've taken to share capital, is 378,000, and then the rest of the money would then flow into the retained earnings and reduce our retained earnings because we paid more than the average issue price. And then in this case, we would have it would be 59,500. And then moving on to ordinary share dividends, we'll have here the interim dividends, and then we'll have the final dividends. You can call it final, declared, recommended, whatever name you want to put in. So for interim dividends, let's something that relates to that. They say an interim of 12 cents per share. So an interim dividend of 12 cents per share was paid 1 February 2017. So at the time it was paid, the 150,000 shares were not issued, and also the shares were not yet paid back. So it must have been paid on the shares that were issued right at the beginning of the year, which is 900,000. So, and then in this case, we would say 900,000 multiplied by 12 cents, which is 0.12. And then the dividend would be 108,000. And then the final dividend, so they say final dividend was declared on the 30th of August 2017. They did not tell us what the final dividend is on one share, but one thing they did give us is that they gave us an extract of a balance sheet, and they gave us shareholders for dividends 168,000, and we know that the one that is at the end of the year is the final one. So 168,000 would then be the final dividend. So 168,000 would be the final dividend. Sorry guys, we should have put so for here, obviously we said that we made a loss on this sale because we paid more than the average issue. And then the ordinary share dividends, we'd have to add these together, and then if we add those together, it will give us a total of 276,000. So 276,000. And then if we say balance at the beginning of the year plus the tax minus the purchase minus ordinary share dividends, that will give us a retained earnings amount at the end of the year of 250,000. And that brings us to the end of our lesson. Thank you guys for joining. Really appreciate it. Please make sure you tune in the next lesson. Cheers.